What do you think Coinbase is doing right now?
Well, one of the things that it's doing right is that it is, from a regulatory point of view, the most compliant exchange out there. And it's losing all its competition. Last year's demise of FTX was very important, and even Binance's issues have had a positive impact on Coinbase from a market share point of view. I think they're also in the right place at the right time, and they're executing brilliantly.
Apart from legal troubles with the U.S. Securities and Exchange Commissions, Coinbase is also facing legal action from individual plaintiffs. They claim the crypto exchange sold and traded unregistered securities. But Coinbase has won the court case amid the SEC. So what is happening? Let's see what Kathy had to say before Coinbase won the case to get a better understanding in the overall markets.
And I'm also curious, you said you find Coinbase to be the most compliant in the crypto universe in this respect. Of course, the company is still fighting with the Securities and Exchange Commission over regulation of some of the securities it has listed. Do you think that the company is going to succeed in its battle with the SEC on that front?
We think the odds are high, and the reason we say that is because of Ripple's win, Grayscale's win, but especially Ripple's win, and what we learned about securities and timing of issuance versus trading on a platform when something starts as a security and evolves into something else, not a security.
The crypto exchange has secured a favorable ruling. The United States Court of Appeals for the Second Circuit ruled that Coinbase's secondary sale of cryptocurrencies was not a violation of the Securities Exchange Act. Coinbase disputed the relevance of securities laws. It claimed that secondary sales of crypto assets did not fit the requirements for securities transactions. After considering several factors, the court opted to overrule some of the rulings made by the lower court. The Securities Act Section 12 established Coinbase probable liability for selling unregistered securities, according to the court. It did, however, deny the plaintiff's Securities Exchange Act claims. It found inadequate evidence of contracts unique to the transaction that would have allowed for Section 29 rescission. The court's ruling was dependent on how Coinbase user agreements, which changed over time, were interpreted. The use of different language across different versions complicated crucial aspects of the case. The plaintiffs noted that their lawsuit promotes investor safety in the crypto market. They view the verdict as a step forward in regulating crypto exchanges. Coinbase claims the ruling provides clarity to its long-held belief. It supports its stance that secondary cryptocurrency sales aren't equal to securities transactions.
I also wanted to ask you, I know that in your latest disclosure that you did lighten your Coinbase stake a little bit. I mean, it's still the largest position in your benchmark ETF, but I'm just curious what was behind that move.
Yes, well, Coinbase has had a magnificent move since all of the regulatory concerns were plaguing it last year. I think it's up more than fivefold. And so this is simple portfolio management. There are other stocks in the portfolio that are lagging. This has had a great move, and so it's simply trimming, profit taking, and really nothing more than that.
But remember to subscribe to the channel as we provide the latest in the crypto world, and don't forget to give us a like and comment down below what do you think so far. Now, let's get back to the video. Reacting to the ruling, Coinbase Chief Legal Officer Paul Brule wrote on X, "We appreciate the Second Circuit confirming today what is clear under the federal securities law. There's no private liability for the secondary trading of digital assets on exchanges like Coinbase. Why? Because contracts matter. So what does this mean for crypto? Does Coinbase's recent victory affect the crypto market? Some experts believe it holds broader implications for the industry. The ruling adds an extra layer of legitimacy to cryptocurrencies. It also reaffirms that the secondary sale of cryptocurrencies does not qualify as securities. However, investors have to tread with caution. Until there are clearly stated policies, we can never be so sure."
So what's going on is the same story that's been on for a while. We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply, and then there was the ETF. So basically we've got a perfect setup of liquidity plus new demand plus reduced supply. And so the rest of the year should play out the same way. I mean, I continue to be very bullish this year and very bullish for most of next year.
With only about a week left until the much-awaited halving, Bitcoin is still trading around the $70,000 psychological level, bolstering bullish long-term price predictions from market analysts. Following the halving, Bitcoin ticker's down $68,000 price could appreciate over 160% to reach a cycle top of above $150,000, according to a research report by Bitfinex analysts shared with Cointelegraph. Using a straightforward regression model, we predict a 160% post-halving price surge in the next 14 months, taking the price to between $150,000 to $169,000. Bitcoin fell 2.2% in the 24 hours leading up to 11:50 a.m. Universal Time, coordinated to trade at 70,694.
Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's that the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on.
However, the analysts note that there is more built-up selling pressure than in previous cycles due to Bitcoin hitting a new all-time high before the halving for the first time in crypto history. While this is a sign of confidence for Bitcoin bulls, it could also introduce significant selling pressure, as 1.87 million BTC, or 9.5% of the circulating supply, was bought above the $60,000 mark. However, Bitcoin prices could see a sharp decline during the halving period due to the Federal Reserve's quantitative tightening, which is removing liquidity from markets. Bitcoin ETFs amass 4.28% of circulating BTC supply. So what do you think will happen to Bitcoin after the halving event?